Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil. Paris rapeseed. From the sloppy looking late April to early August head and shoulders top, the market tried lower but did not fulfill its potential on the downside, having been stripped quite a bit of its bearish incentive by the support of the slowly rising long moving average, which is currently at 469.25, and finally rejected back up by the support from the 50% absolute Fibonacci line at 445.5. This rejection did not happen all at once, but during most of August and into the first half of September. In the process, prices formed a not very pretty looking reverse head and shoulders pattern with a fairly flat, bright red neckline on my daily chart, currently at 476.75. 6 weeks ago, prices broke higher over the bright red neckline, as well as over the medium moving average, currently 483.75, stabilizing over both of these for about a week before moving higher. 5 weeks ago, I laid out the following: a primary topside target X overhead for the reverse head and shoulders pattern in the 496 area, a secondary harder to reach target X1 up in the 504.25 area. These were soon reached in mid-October. Prior to this happening, I also said 5 weeks ago, and I quote, "There is one other feature I'd like to highlight, though at this time I'm not sure if it is very relevant, so it's more like a just be aware type situation. It is the construction of a possible mid-August to date rising expanding wedge pattern, currently 519.75 to 534.5. I have not highlighted it in my daily chart as I'm not sure of the weighting I should give it, but it is something just to be aware." End of quote. Now I've since highlighted it in purple, and you can clearly see that the market has followed it higher with one aberration this week of a breach below the lower trend line, which yesterday and even today has seen a recovery and repair of this breach. I should add that 4 weeks ago I said the following on this pattern as well, and I quote, "There's also now the possibility that this expanding wedge pattern may be morphing into a late September to date quite acute bull channel. This development is one to watch, as it could be the avenue by which the market rises up to reach target X1. End of quote. As we're already past target X1, I'd now like to look at the purple bull expanding wedge pattern come bull channel to continue to lead the way. So, what have we in the way topside? Well, we are over the dark blue neckline, currently at 513.25, of the June to October 2023 head and shoulders top, as well as the congestion between 513.75 to 519.5 from September 2012. However, we do have some, let's say, limited congestion from between a July 23 high at 526.5 up to the February 2023 high at 565 even. And that's in the form of a quite large bear flag stroke bearish halfway hesitation pattern from those days. This right now does not look strong enough to stop a move higher with sufficient ammunition below, much as we have, but it might erode the bullish incentive, though it will take space and it will take time. Winnipeg canola. During very recent times, the moving averages had acted as a support, as a resistance, and as a nuisance. Right now, the market is utilizing the flatlining gold long moving average, currently 627.40, and the mauve medium moving average, currently 620.70, and the green short medium moving average, currently 616.60, as supports for an attempt higher, especially the green short medium moving average during mid-October and the gold long moving average this week. However, these are not the only features that I wish to draw your attention to. You see, 4 weeks ago I said, and I quote, "The activity over late July to date has also created a quite lopsided double bottom pattern, and last week we were trying to break above the neckline, which approximately equates to the 2021 low at 629.60. Now, as I said last week, so that is now 5 weeks ago, as I said last week, and I quote, "I'd normally wait a little while for a confirmation for this move higher, but I'm tempted with what I have seen in the other markets to lay out some potential targets topside right now. Thus, a primary target X would be in the 671.80 area, with a secondary harder to reach target X1 up in the 688.10 area. These of course presupposes that what I see right now is as a double bottom does not become in due course a bearish cat's ears pattern, end of quote. Well, since then, not only have I chosen to stick with this idea of a double bottom, but to develop and possibly enhance it by looking at the whole August to date action as a possible reverse head and shoulders bottom, with a highlighted dark blue neckline currently at 659. We have not as yet triggered this pattern, but it is waiting in the wings, especially today being tested. It's waiting in the wings should the dark blue neckline be broken, and properly broken, on the way up towards target X and X1, at which time I will lay out fresh targets for this new pattern. One other potential feature I'd like to look at. You see, we are awfully close to forming a weekly Q reversal up this week. We are not there yet, but please keep an eye on this last week's high at 659 even. We're awfully close to that now, but 659 even was last week, and if it is exceeded this week, if it is, then keep an eye on Friday's close, tomorrow's close, whether or not prices close over 654.90 or under 645.90. Bursa Malaysia crude palm oil. I said 5 weeks ago, and I quote, "Of all the oilseeds and veg oils, palm oil has been the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April." End of quote. Okay, so the first of these patterns is the broken upper time, currently at 3700 of the August to November 2022 bearish shift pitch walk. This has acted as a declining support throughout late spring and summer. The second is the neckline, currently at 42.91 of the September to November 2023 reverse head and shoulders pattern. Finally, I'd also possibly add the neckline, currently at 43.83 of the September 2015 to November 2017 head and shoulders top, though I'm not really sure about this one. Anyway, in early October, the market broke up over the lower September to November 2023 reverse head and shoulders neckline and became somewhat capped by the next neckline above, the one from September 2015 to November 2017 head and shoulders top. This bracketing of the market between the 2 necklines happened throughout most of October and eventually led to the formation of a mid-September to early November bullish halfway hesitation, which saw its topside targets reached this week. Prices are now testing a pair of 50% Fibonacci lines overhead, one from the July 2019 to March 22 move at 49.64 and one from the May 2020 to March 22 move at 49.92. It seems that the market is starting to get clear of one, if not both of these on the upside. If that continues, then we have a late June 2022 high at 51.17. But beyond that, not much. Not much until the mid-June 2022 gap between 53.20 to 54.18. And then the big 50% Fibonacci line of the January 2021 to March 22 move, that big move at 56.06. It is at this point I would like to raise a big final point, a point I have been stressing now for 33 weeks. I gave my thoughts back then on what was going on thus, and I quote, "So what now? Well, for this I went to my standby on such occasions, the longer term monthly charts, and there was one clear standout level that needed to be watched, and that was the November 2022 high at 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to that 44.08 area, and then what prices do at that level." End of quote. Now, I added only as recently as 4 weeks ago the following, and I quote, "It seems obvious to me, at least, that I should still consider monitoring the 44.08 level, not only because it is a longer term play, but also to see if its influence could be felt in the very recent action we have seen this week and possibly in weeks to come. We are now closer to it than we have been since early April." End of quote. Well, we are now, well over 4408 level, and I will now start analysing the longer term pattern to ascertain what the opportunities might be. Please note, we've only had one single month close over 4408, and this is a very long-term pattern. Ideally, I'd like another consecutive month, but I'll try and bring a preliminary idea next time, just in case. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.